So let me go through some of the things that we're going to be going over today. Let me talk a little bit about our speaker today. Our speaker today is a personal friend of mine and also a business partner of mine, Olga Moretti. Olga Moretti is, but more important than that, she is a pretty smart person. This lady is a real estate broker, and she started her career out like you as a realtor, a licensed realtor practitioner representing buyers and sellers and transactions. And then in the 90s, she decided she wanted to go to law school. So she went to law school, and she got a law degree, and then she took the bar. She passed the bar and became a member of the California Bar in the state of California. And then from there on, she started to practice. She worked with a judge, and she worked with a number of other lawyers. And since that time, she's kind of been on a high rise to success. The lady is extremely successful as an investor in real estate. She's extremely successful in running an independent escrow company. She's run an independent escrow company for about 12 years now. And she's been a personal friend of mine for years. She was president of the California, not the California, but the Southland Regional Association of Realtors in 2002. And she and I are partnering together in Alpha Omega Escrow. But the things that really pertain to what she's going to be talking about today and her expertise is that she has been on the Legal Action Forum for the California Association of Realtors for a number of years. And you might say, what is that? Well, they meet 3 times a year, a bunch of attorneys who specialize in real estate. And they meet at all the California Association of Realtors conventions, all the board of directors meetings. And they talk about legal cases that are pending, legal cases that have already been heard, dealing with California real estate. And they are an important part of the Standard Forms Committee, the committee that prepares the residential purchase agreement, the commercial agreement, the disclosures. Every document that you see that is on zip form goes through the scrutiny of these attorneys. And furthermore, Olga has been on the risk management forum team for about 3.5, 4 years for the Southland Regional Association of Realtors. Have any of you attended those risk management meetings at all? Is that your hand? Yeah. A couple, that your nose?
No.
What?
I think I went once.
You went once, okay. Well, let me tell you, it's a powerful information. It's free. Anybody can go. And they have 4 panelists. Olga's one of the panelists. Steve Spile. Steve Spile is a real estate attorney here in Encino. Steve Spile is on retainer by our office as one of our legal counsels. And so he's a personal friend of mine as well, but a great guy, very smart, well versed in real estate practices and law and litigation. We have Kathy Maringer. Kathy Maringer is a realtor. I believe she works for Coldwell Banker Real Estate out in Westlake area. She is one of the foremost experts when it comes to short sales. As you know, short sales are kind of minimizing now. They're a smaller part of our market than they once were, but she's an expert. And the other one is Jeff Kahn. Jeff Kahn is an attorney, but he's also a real estate manager of an office, a Berkshire office here in Northridge. He's been on the board of directors for the Southland Regional Association of Realtors. So that's the people that Olga hangs out with. She's well versed in what's going on in this R.P.A. How many of you have written the offer in the last month? Can I see your hands? Okay. Hand up, hand up. All right, the rest of you, let me just ask the other question. How many of you have written a listing contract in the last month? Can I see your hands? A listing contract in the last month. The rest of you are out of business. You haven't written an offer, you haven't written a listing contract. What? Oh, maybe a lease. Anybody do a lease? Very good. The rest of you are out of business. You guys better get busy, because if you're not writing listing contracts, or you're not writing purchase contracts, you're not writing lease agreements or lease listing, you are not doing much business. And you're just kind of pretending. You show up, you drink coffee, you talk to each other, you talk about the market, you talk about Mel and what he's not doing. Right? Then you go home.
You pay your dues and you go home.
Right, you go home. All right, can I have my presentation on the board since you guys are fooling around with something?
You cannot have both. You cannot have the...
Okay, so are you ready with what yours is? because we gave you another minute. Are you ready now? Estamos listos.
No,
It's not connecting.
you
to
cannot
the
view it
laptop.
on the projector if you're gonna be doing the.
Okay, so my question is, are you ready?
Am I ready?
For your the presentation that we're going to be doing with Olga. Are you ready?
Yes, I guess.
Okay, that's what I'm asking. Olga's not here, so why don't I just go through mine right now? Can we just do that?
Yeah, but what do you wanna do?
Let's do it on your iPad.
What's that?
We're gonna do it on your iPad.
Okay, then you go get my iPad.
You
and
cannot
look
do
it
it
up.
as a projector, it's when you have the.
No problem,
slide.
no problem. All right, so, no, my iPad is in my office. Oh, you get the cord? Okay. All right, let me tell you guys about some updates that's going on. Olga is coming from the San Gabriel Valley, so she's already notified me, bless you. She's on her way, all right? Let me tell you some of the folks who are going to be online with us, some of the folks who are doing the video conferencing. Margie Verduzco, Floyd Lima, Angelica Solomon, Maggie Hartunian, Candace Jones, and Ivy Lang. So among all of you are them. They're working out of wherever they're at, and they're going to be a video conference in with us. Just like last week, we had a presentation on what, who remembers last week's topic? Anybody remember last week's topic?
Prelims.
You say prelims. That was about 2 weeks ago. You say lone wolf. Yeah.
Oh, that's right. It was,
Mortgage minutes rates are still dropping again. We're headed back to 4%, it looks like, in general terms. So people out there saying, you know, where are rates at? Rates are at historic lows. That's what I would comment. And what I really wanted to talk to you about today is mortgage insurance. So I'm hearing a lot of different questions and comments about, you know, these loans without mortgage insurance. So I want to make sure everyone understands what mortgage insurance is, first of all. Mortgage insurance is anytime you have a loan with less than 20% down, the banks typically require mortgage insurance. Do you all understand that?
Can you repeat that, Craig?
Anytime the borrower does not put down 20%, there is mortgage insurance. Do we all understand the way that most mortgage insurance works? Most of it is monthly mortgage insurance, okay? Monthly mortgage insurance. What is it based on? Does anybody know what it's based on, the amount that the client pays in mortgage insurance? Loan amount. What determines their rate though of mortgage insurance? What are the components? Anyone want to guess? Make it interactive here.
credit.
Credit. Who said credit? I wish I had a gift card.
You're in the wrong business.
Credit score. So
Make more money with our business.
with what is the credit score on, and this is non-FHA, the credit score on conventional loans is the main determinant on what factor the client pays in mortgage insurance, okay? What else? One more item. Anybody? Mark? Besides credit score, what would determine the factor that they pay in mortgage insurance?
Loan amount?
Loan amount matters if it's above or below 417, there's one other thing. Down payment. So your down payment and your credit score will determine the amount that the client pays in mortgage insurance. Why is it important? It's very important because if that's misquoted up front, it affects their purchasing power. Does that make sense to everyone?
Yes.
If we pre-approve someone to a certain dollar amount and whoever did that did not quote that mortgage insurance right, and then when they go to actually get the mortgage insurance and it's higher, your client might pre-approve for $10,000 or $15,000, $20,000 less in purchase price. So it's a big deal. In saying that, I'm going to a couple key selling points about a company called Wintrust where I work is that we actually utilize all the different mortgage insurance companies. So that's very powerful. So if we have a transaction where we want to shop for mortgage insurance, we have the ability to shop for the lowest MI rate out there. And they're all, a lot of them, they're all different. Every MI company typically will have a different rate. The other thing that we have that's important to know is MI is typically another underwrite. Does everyone understand that? So you think your loan's approved, then we have to go out and get MI approval. Could that be a problem? It could. One of the good things about Wintrust, we have delegated MI coverage. It means if we get your first approved, we do not have to go out and get that MI insurance. Anytime you're working with a broker right now, they have to go out and get the MI approved. It's a second underwrite. And a deal could blow up over that. because the MI company's underwriting is typically tougher. So I'm giving you a little bit of an overview. The one nugget I want to say out there too is when people are saying, are there any loans out there without mortgage insurance? You think that, is the answer yes or no?
Yes.
What is that, is there?
Yes.
What, how would you not have mortgage insurance?
20%.
What if you did less than 20% down? Is there a way for the client not to pay monthly mortgage insurance? Yes. It's paid up front. And it's very, very powerful right now. I want you guys to know the term. And the reason I'm bringing this up, we're heading into the winter months where typically things are a little slower. I like to call it manufacturing transactions. Sometimes we have a buyer out there, a borrower, that someone else approved for a certain amount, they can't get qualified for more. We can manufacture them into a higher amount. One of the ways is called single premium mortgage insurance. It's paid up front. It is a powerful tool.
How much is it?
It depends on credit score, down payment. It's anywhere from 1.5 to 2 points up front.
They might be cheaper doing it that way in the long run, right?
And you get them approved. I've seen deals where you get someone approved for an extra $40,000, $50,000 in purchase price.
Is that MI if you do it up front? Tag right off? I hope.
Yes, up front. Yeah, it is. Where this monthly is not, because it's considered a closing cost now. So it's even more powerful. Now the thing is, it's more money up front. And we're heading into a tough market. The seller gets the credit for closing costs, 3%. You're not using all of it. The seller can pay for some of that. The seller can pay a portion of that single premium MI. And it's something we can talk about one-on-one, but I think it's powerful because one of the problems that we have, when I say we, working in the San Fernando Valley, typically our borrowers are always trying to get pre-approved for more. You agree with that?
Yes.
Right?
Yes.
In other parts of the west side, maybe that's not the case. In the San Fernando Valley, most of our borrowers, whether it's because they have some money that they're making on a family member that's going to be helping them pay, but they can't go on the loan. So one of our problems is always getting them approved for more. And this is a way to do it. And I know I went way over my minute. Any questions on anything that in front of
You're
you?
only giving a minute?
James said I only get a minute today.
That's what you were
Oh, the mortgage man. Today was mortgage 5. But we can talk about it more one-on-one anytime. I think it's powerful really getting to know this insurance thing, because if you increase buyers' purchasing power, they're going to be ecstatic, a lot of them.
How about a hand for Craig Coker? We just had another buyer, loan accepted, actually the offer accepted. Craig did the preliminary work for this buyer. The buyer was fighting us. He's too hard. He's asking us for too many papers, too many documents. And we said, look, he's asking you for it early up front, so he doesn't have to ask you for it later. We have a problem later on down the road. Bonnie got the offer accepted, and our buyer is getting their home inspected in a day or so. So thank you, Craig Cover. All right, so let me move on. Our speaker is here. Turn that light off behind you, Craig. Cool, very good. All right, so we're going to get started with something here that all of you have. You're all individually made. I look at Lillian Boero, and I say, there's only one of a kind. She's the only one, right? We're specially made, and we all have special gifts. And the challenge is that most of you don't know what your special gift is. So I encourage you to seek, what is your gift? What is that special gift that God has given you? Can you scroll up? All right, so I'm going to talk about some of our presenters that are coming up in the next couple of weeks. Kit Young from the Southland Regional Association of Realtors will be our speaker, and I believe that's on the 14th. Some of you have talked about, I don't have a database, I don't have a contact management system. You do. If you're a member of the Southland Regional Association of Realtors, you have a database system already in place that you don't use, most of you, and I would encourage you to do it. If you want to be able to put your clients in that database, you want to be able to send your clients updates on listings in the area that they say they want to live in, you will need to be at this meeting so you'll know how to do that. Next one. All right, so we are opening up October 1. When is that?
Tomorrow.
Mañana. Oh yeah, tomorrow. We're opening up a West Side office. We're opening up an office in Culver City on Slauson. So those of you who have business out that way, let us know ahead of time so we can make sure you have access to that office. It's easy to get to off the 405 freeway, one of our favorite freeways, right? It's right near the 90 freeway. You know where that's at, right? Culver City. It's not too far from the Fox Hill Mall. Anybody know where that's at?
Yes.
All right. So in West Side office, we are moving. So if you have clients who are doing business out that way, let us know so that we can give you access to that office. Next one. Okay. Some of you know that you're going to be going to the luncheon. October 8th is going to be the Top Trends. Oscar Way is a presenter. And he has a session that starts at 1:45 to 2:30. He has another session that starts on Thursday from 10:45 to 11 o'clock. Be there or be square. That's old school stuff, right? Next one. All right, so Oscar, as I mentioned to you earlier, he's going to be a presenter for us right here in our little home front. He's going to come here and he's going to give us a presentation on what's going on with some of the trends, with buyers, with buyer financing. So if you want to know what's going on, you need to be here. We're trying to give you guys as much information as you can retain so that you can feel confident when you meet with a buyer or a seller or anybody, so you can have all the updated information. Mark, is that your hand up?
Oh, no.
Okay, all right, next. All right, so there we are. I think that's it. That's it. All right, so I believe our speaker is here. Can you get Vettel back in to make sure that we're all squared away for getting our online access? You can unplug that whole thing, I take it, right?
But I'm just gonna have her do from here.
From the iPad? Oh, wow. You guys got that all together. Why don't you close down that laptop so you have more space?
Well, the people on any meeting are on the laptop, so I'm just following through. One second,
Sure. All right.
and we are good.
There we go.
All right. So, oh, look at who's here. Olga Moretti. How about a hand for Olga Moretti? All right.
Coming out in November, and has quite a few revisions. It's been a while since we've done a new one, and it's has some interesting things. But anyway, you'll see whatever's in blue, that's the revision. So now it will have a date that it's prepared. I'm pointing to the thing. Right? Yeah. So, which is kind of good. Before it was just the signature, but now it's actually, there's a date when you prepare it. And it also spells out that brokers aren't a party to this agreement, which is good. Also, when you print out the R.P.A. now, it will automatically print out your agency, your disclosure, your agency disclosure, and your representation of more than one buyer, just in the event that there is. So anything that's checked will automatically be printed out for you. And it has a disclosure regarding the fact that you may be representing more than one seller.
Oh, can you speak up just a little louder because we got the video conferencing.
Oh, okay. Yeah. Okay. Now, there's something here in the date for closing escrow, which I've not used one of these before. I apologize. You can only, before you were able to write it in, and then some people would put in the days. So then there was a conflict in escrow, or the buyer seller didn't really know if it was going to be October 31st or 30 days from September 29th. Now you can't fill both of those in. If you fill one in, you won't be able to input anything in the other, so that will clarify it. So you can't have that mix up there. Also, it's been changed. Before, the default was that the buyer would deposit the check, but now the default is that the buyer will make a direct deposit to escrow by electric funds. That's the default. Or you can check cashier's check or personal check. And then you have to check if the buyer's going to give the deposit to the agent, which I believe in this office, we don't accept, we don't take checks, right?
No, that's correct.
Okay, I just want to make sure. So it's automatically now going to default that the buyer will direct deposit to the escrow holder and then electronic funds unless you check something else. Okay, how do I move this up and down?
We'll do it for you.
Oh, you do that.
Bonnie,
Okay.
that's good. Hold it. This is it here. The-
Oh, I could, okay, all right. But I-
Thank you, Jim.
Now also, if you move it down a little bit further.
Oh, sorry.
No, it's okay. The increased deposit has language added to it that if you increase the deposit, you need to do a new liquidated damages, costs, blah, 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 because that's also been a confusion in the past. Because a new deposit does not get to be held as liquidated damages unless you have filled out a new clause, which the escrow can do for you, or you can do it yourself.
Hey, hold, can I stop you for a minute on that
Sure.
increased deposit? Because again, normally what you're gonna have, you're gonna present an offer and somebody's gonna say, I need a more of a deposit, right? But the purchase contract is already filled out initially for whatever offer you made, right? So how do you come back usually and I never really done an increase.
Yeah, now this is occasionally somebody will put $5,000 to present the offer.
Right,
And then 10,000 when they open escrow. So you've got 15,000 total.
right.
But if you don't fill out a new liquidated damages clause, which is we have the form here, CAR form, the most that seller will be able to hold would be the 5,000 because they have, every new deposit needs to have initialed
Gotcha,
liquidated damages.
gotcha.
What you're talking about is something that becomes part of the offer, counter offer situation,
Right.
and then the total deposit will be the total deposit that's in the contract.
Okay,
Also, they've moved the cash offer up to where the money is, which makes more sense because we used to go through all the loans and everything and then they would have cash offer, so. And then the default on this is also that verification of funds, it's already defaulted to 3 days. Or, I'm sorry, it's defaulted to attach to the offer, or the buyer shall within 3 days unless you put in more days. So the way this is written, when you present your offer on all cash, which I know these days are more all cash than we used to have in the past, you attach the verification of funds unless you check this box, and then you have 3 days or whatever's put in there. Okay, then some of these are just, let's move it down a little bit. And then the balance of the down payment, that's just pursuant to escrow holder instructions. So that just says that when it's, the escrow holder will determine when the file is complete and when the additional deposit needs to be made. Also, something that doesn't concern most of you, but your manager, is there's no more initials for the managers on all the pages, only at the end of the contract. And there's no date anymore, so as long as the manager reviews it in a timely manner, that's all that's necessary. Okay, let's go down to, there's changes been made to the appraisal contingency and the loan contingency have been clarified so that if you remove the appraisal contingency, but the loan contingency is a longer period of time, so you haven't removed your loan contingency yet. If the property doesn't appraise, you don't get to go back and use the appraisal contingency for not getting the loan. So that's very, very important. So if you think there might be an appraisal issue, don't remove the contingency until after the loan contingency, or remove them at the same time, because you can't no longer use that as an excuse because you can't get the loan. So that's kind of important to know, because before it was like, well, we didn't qualify, can't get the loan, the property doesn't qualify, so the loan contingency is still in effect. But now if the appraisal contingency's been removed, it's been removed, and you can't use that as an excuse later. That's, and they've also extended the loan contingency. The default now is 21 days, where I think it used to be 17, and that just wasn't enough time.
It used to be more than 17, didn't it? And it went to 17.
Right,
21.
yeah.
Yeah,
But now it's back to 21. That, unless you can put something else, obviously, if you're in a multiple offer hot situation, you want to put 10 days, you can do that. And, okay. Then, this is the buyer credit. We've been having problems with the seller agreeing to give the buyers 3% credit. Then the lender says, oh no, you can only have 3,000, you close the escrow, and then the buyer says, well, where's the rest of my credit?
Right.
Okay, so this clarifies it now, that the credit, no matter what's in the contract, it's limited to what the lender will allow, and that the seller has no duty to provide additional credit to the buyer during or after the closing escrow. So that clarifies that, because it has become a problem lately. Now, of course, if you want to use that credit to buy that fabulous PMI insurance, that comes in under closing costs. So that's one way to use up the extra credit if you have
Not
extra
you
credit.
lose it, right?
Right, yeah. Okay, then it also states here, it clarifies buyers, if he's going to sell a property, you have to actually add the agreement now. Otherwise, the default is that the agreement is not contingent on the buyer selling the property. Okay, so let's see. Then the addendas are the same theoretically. Now, I haven't tried it. Whatever you check on there should print up at the time you print. And also, it will print up a table of contents if you ask for that. Okay. Now, there's a really important thing here coming up with the W.P.A. But also, they removed a couple of the inspections. So the natural hazard is still there, and then they've added, you can't read that, but it says environmental and tax. So you can check if you need those additional reports. I don't know why it's not legible. It says,
It says environmental and tax report.
right, so you can check those if you need those, but otherwise, or anything else that might be included in an actual hazard later, then you can write it in and then prepare by the company that you're choosing. And then
So
basically,
this used to be, sorry, this used to be in the page 4, now it's on page 2.
yes, the reports. And these are the only reports it's going to have. You can write in any other reports that you want. Also, this does not determine who's going to pay for the work. This is only who's going to pay for the reports. Okay, let's go down. And then, I don't know why that stuff is in green up there.
What's that?
Oh, that just says
COE.
COE in parentheses. And then there's, so that doesn't really matter, but they've added in who shall pay for the cost of compliance with any other minimum mandatory. So the carbon monoxide and the smoke alarms are in one, and then there's others, because some cities have other kinds of inspections or repairs that need to be done. So that will cover that. And then if other cities have retrofit, we've got a box to check for that, who will cover it and who is going to pay for it regardless of whether it's completed before or after escrow. And then if there's any inspections, like for example, I think the city of Pasadena requires property inspection. So this will cover that any required government conducted or point of sale inspection report is to be provided within the time in 14A, which is your contingency. Okay, then we've added in that the buyer shall, within 5 days, or unless you put in your own date, sign and return escrow holders general provisions, because sometimes they just don't sign. So if they don't sign, they're basically in breach of this agreement. Then buyer or seller has remedies. also, we have added a clause for HOA because sometimes you need to order the HOA documents and the seller obviously at that time doesn't have any money in escrow. And then it's like, do we use the buyer's money that's in escrow to send, because escrow sends the check sometimes to the HOA. So now they're requiring that if you need a special amount for HOA fees and documents that and they will deposit it. So if you check this, then the seller will have to deposit that so that escrow can pay that. It's not going to come out of the buyers.
So Olga, I have a quick question on the WPA on the termite. So it's been removed?
Yeah, there's a little bit section there that'll
Okay.
deal with that.
Hey, Olga,
Uh-huh.
can I ask you to clarify the HOA?
Yeah,
So are you saying that at the very beginning of a transaction, and if money is needed to purchase the HOA docs, if the seller is to pay for it, that the seller is to put a deposit into escrow to cover the cost of that?
yeah.
Is that right? Did I interpret that?
Well, yeah, because otherwise you need permission from the buyer to use his money.
Does this extra line get the buyer's permission, or does it say?
No,
say
no.
who's-
It just says, you just decide who's gonna pay for it, so there's no dispute. Because the escrow says, okay, well, order the HOA docs, and you have to send a check out. But who's gonna pay for it, the buyer or the seller? So this way determines ahead of time who's gonna pay for it, and then the seller will have to either pay directly to the HOA or put the money into escrow to pay for it.
So if it's your seller, you ought to be able to tell him, hey, it's
Yeah,
gonna cost you
yeah,
$200.
just like they pay for the 9A.
I'm gonna need that as soon as you accept this offer.
Yeah, right.
Right.
So, okay. And then we also have
If it's
added
buyer
a
waives,
clause
purchase
that
warranty.
the buyer waives, so it's clear that they're waiving the home protection fund. So that's been a problem. And, they
But
didn't
you don't wanna really
also-
check that box, right?
Only if the buyer waives it. Yeah, see now, yeah, because it's been an issue as, well, did the buyer really waive it or you just didn't check it? So it's gonna check who's gonna pay for it if you're gonna get one, the additional coverages. And then though, you can check that the buyer is waiving it. So you discuss it with your buyer and he waives it. Then we know that the buyer has waived it, but he can come back later and buy his own. Sometimes you don't wanna ask for it,
Right.
right in the.
And okay, if it's a gift from the real estate agent, you just check that the seller gonna pay it anyway and you just
Was
tell
it
the
the
seller.
seller's agent?
Yeah,
The seller's agent's gonna pay for it?
sometimes it happens.
Yeah, I suppose. I wouldn't know, I wouldn't check the seller. I think you just add that on to the back, on
Okay.
additional terms or something.
Okay.
Yeah. But then you wouldn't check that. You would maybe asterisk where it says buyer seller. And then
But would it get ordered? I guess it would get ordered because you got it on another.
Yeah. Yeah. Okay, now, they've added some things in the, what is excluded, so. The existing, they've included solar power systems, that's just a clearing up that. But they've also added things like water features, fountains. And then, I guess there's been disputes over how many stoves or how many refrigerators. So you can check all stoves except the one in the garage, or all refrigerators except the little one under the bar,
Yeah.
and all washer dryers. You know, so that just clarifies if there's more than one appliance, I guess it's becoming a problem also. And they also have added in any kind of phone automation system, all the devices, control units,
Yeah.
and software permission, passwords, codes are or are not. But they are included unless you check are not. So feel so many people now are putting
Kids.
wiring and things, you know, they've got the security systems through the internet, so you have to be really careful
No
with it.
questions asked.
So, and that is a default that they are included. So if the seller is gonna take out whatever. Then, we've also clarified things that are leased. So the seller needs to disclose to the buyer anything that's leased, not owned, or subject to a lien, such as solar system, at least kind of a security system, those kinds of things, a water system. So all of those now the seller's required to disclose and provide the buyer with documentation as to the terms of the contracts.
And warranties and stuff,
Right, warranties. Then, everything is included in the purchase price, are owned by the seller and should be transferred free and clear of liens except the items disclosed, which would be maybe a solar system, and then you have to provide the contract, those kinds of things. And then what's excluded from the sale are audio, visual, whatever, speakers, all of that's in before, but what we have done is clarified, put any item attached to the property. Okay. But not furniture, other items secured for earthquake purposes. Also, the brackets attached to the walls or the ceilings remain, or you can check that they will be removed, holes will be repaired but not painted, because if a TV is bracketed, it's not included, but the brackets are. But if the TV itself is actually affixed to the wall, then that is included. So that's. Sometimes we try and clarify things and then it just becomes more things to worry about, but. Okay, now, we've also highlighted the seller remaining in possession. Well, first of all, we've changed the default for possession 6 p.m. I guess there was an argument that 5 was too soon. It wasn't the close of the business. I mean, I don't know, 5 or 6 doesn't matter that much, I don't think, but we've changed that to 6. And then there are issues as to how long the seller stays in a property. So there are separate agreements for if the buyer is going to stay for a few days, or if he's going to stay 30 days or more. So that's important to know that you get the proper agreement signed. And then also you need to be careful if they stay 30 days or more that they don't actually become a tenant.
Yeah.
And then, so you want to make sure you use the right contract because that takes care of that. And also you need to make sure that if it's an owner-occupied loan, the length of time the seller is going to stay in the property is not going to affect the buyer's loan. So those are things we need to be aware of. Okay, then this is the warranties. The seller assigns any warranties to the buyer and can deliver to them. And then it's the seller shall provide passwords, codes, and all the means to operate all the locks. And we added in home automation systems, internet-connected devices that are included in the purchase price. So then we're just coming into the wireless era. Okay, now we've added in here that the fully completed, unless exempt, the seller will fully complete all the disclosures. So he can't just check off, sign it and give it to you. He has to actually check. And then it's how it's fully completed. If he's answered all the questions and completed and signed the seller section, and the listing agent has completed and signed the listing broken section. So it just clarifies that the seller can't do a half TDS and have that count as a TDS.
Unless the seller's a bank, right?
Well, then, unless the seller's exempt from obligations, which is a bank, a probate.
Excuse me, I'm sorry. I can hold them to the end if that's what we need to do. But
Yeah, it's okay.
Okay.
It's better to ask it while we're on the subject.
okay, I wanted to clarify this section for the disclosures that the seller is required to provide. Is this now saying that they can't leave any spaces blank?
This is if it's fully completed, if seller has answered all questions and completed. So if they're gonna, don't leave it blank, put I don't know or NA or something. They can't just leave it blank because it becomes an issue later on if there's a problem. Did he just forget to do it? Did he purposely not check it?
Right.
Yes.
There's actually an option to autofill with NA or whatever you want to do.
Yeah. On the transfer disclosure.
I don't know your transfer
Yeah.
disclosure, but in zip form, there's like an option to put all the blanks.
But that's not a good idea either.
Oh, it's not a good idea.
Well, because the seller really should go through each item and
That's right.
because it creates liability later when it's there. So you're gonna sit in a deposition on the lawyer wills, and
That's a bad
the other guy's attorney is gonna say, did you actually read these? Oh, no, we just auto-filled it, and I didn't even read what I was. So it's important to have the seller go through each question and do it themselves, yeah. Yeah. Okay. Then, of course, it used to be if the seller finds anything out during prior to escrow, he's got to disclose it. But now they've also had a listing broker, because that's become an issue too. It's like the seller might find something out, and the listing broker now also is required, if he finds it out, to disclose it to the buyer. Okay, and then we can go down, these are cleaning up things, okay. Now, also, has to do again with the condominiums, and then as we specified in paragraph 7, that the buyer or the seller who's going to put in the funds for the HOA documents, they can also either deposit them directly to the HOA or into escrow or the management company. But whoever the party is has to actually deposit, so that will make the seller deposit the money. And if the escrow will obviously get the buyer's permission to use their money, but their money's already in their account. But they can just pay the HOA or the management company directly.
But there's no time frame on that, right?
Well, it has to be done within, you have to provide the documents within a certain time. So, because if you don't provide the documents to the buyer until the buyer gets those documents, that contingency's open. So you want to get them as soon as possible.
Now, you allow us to hold it check?
People get cold feet and then they look for excuses to back out. So you want to tie up all your contingencies as soon as you can. I got out on something once because the seller forgot to give me the natural hazard. And it said that it was, they had it, they just forgot to give it to me. So, and I needed to get out because I was having problems with, it was an apartment building, I was having problems with my partner that I was buying it with. And they sent me the transfer, the NHD like 5 days before closing, and this is Canoga Park. And it said it was in a liquefaction, or which part of the valley is in, but you know what, that's enough to get out of escrow. Like, I didn't know that was an earthquake. So if you get a report and there's anything on the report, you can disapprove. So it's just something you need to be aware of. So the sooner you tie up the contingencies, and we always say that, the sooner you tie up your contingencies, the better. Then you have a sure deal.
Can you say that again a little bit louder?
As soon as you tie up the contingencies, you have a sure deal, because as long as there's any outstanding contingency, there's an excuse for someone to be able to get out of the transaction. You never know what might be happening in their life or their mental health or so. Now, this is where we go back to the wood pesting. So this is what, if there is an inspection, you don't necessarily have to have one, but if you've written that there's going to be an inspection, and who's going to pay for it, the buyer or the seller, it will cover the main buildings. Shall not include water test of the shower. So it's clarifying what the inspection will cover. And then they'll have this section 1, section 2, but this is only what the inspection will cover. Then the buyer will look at it and say, just like you do with repairs,